Now, this assigning overhead cost to inventory is a three-step process. First, you calculate the predetermined overhead rate. We'll take our budgeted manufacturing overhead costs and divide by budgeted activity. Couple of notes about this. We can break it down into its fixed and variable components and then use the equation for a line to estimate the overhead rate for both parts, the variable and the fixed. Some companies will separate it. Sometimes it will all be in one lump sum. It's also worth noting that you can calculate a plant-wide rate or one for each production department. So if you have a cutting department and an assembly department, you would calculate an overhead rate for each one. And there's really no difference in the formula. It's just that you will break overhead costs down by department, say for the cutting department, and then you'll divide by labor hours, and then you might have overhead costs for the assembly department divided by machine hours. And this just allows your products to be assigned overhead cost based on how much they utilize the resources of a given department. We'll see an example later in our lecture notes. So first, calculate the overhead rate. Second, throughout the period, overhead is applied to production through the work in process account based on actual activity. Your formula, overhead applied, is equal to predetermined overhead rate times actual activity. And then third, the overhead account is closed out to cost of goods sold at the end of the period. That is assuming that the amount is immaterial, which is what we'll always do in this course. So at the end of the period, it is likely that your actual overhead cost incurred will not equal the overhead cost assigned to inventory. Overhead is under-applied if actual costs are greater than applied cost, and it's over-applied if actual costs are less than applied overhead costs. When analyzing overhead, you may want to jot this in the margin. We often use the T account for overhead. We'll put actual overhead cost on the left side or debit side of the account and applied overhead cost on the right side or the credit side of the account. Then you can see if actual costs are greater than applied costs, we've under-applied overhead, and if applied costs are more than actual, we've over-applied overhead. With examples, this will, I think, become more clear. Let's look at a brief example. Alpha Omega Company applies manufacturing overhead based on labor hours. Assume the variable manufacturing overhead rate is 50 cents per direct labor hour. In addition, the total manufacturing overhead costs are expected to be $80,000 next year. Direct labor cost for 40,000 direct labor hours is expected to be $400,000 next year. During January, direct labor cost incurred totaled $45,000 for 3,000 direct labor hours worked. Actual overhead cost incurred totaled $8,000 for the month. It is important that you recognize that the first paragraph gives you an estimate of overhead costs for the year, and the second paragraph tells you what actually happened during the month of January. So just 1 month out of that year. Now the first thing we're asked to do is calculate the predetermined overhead rate. And I show you the useful information for calculating this. We have the variable overhead rate is 50 cents per direct labor hour, and we'll need to calculate the fixed overhead rate. Fixed overhead costs are expected to be $80,000. We're told that they apply overhead based on labor hours, so we'll divide by 40,000 labor hours. Notice that we know that 400,000 labor dollars are expected, but the company does not apply overhead based on labor dollars. They apply based on labor hours. The total manufacturing overhead rate is $2.50 per direct labor hour. So this means that this company believes that every time a labor hour is worked, they will pay the direct labor and they incur about $2.50 of factory rent, factory insurance, factory utilities, factory maintenance, etc. It is an estimate of the rate of incurrence of those overhead costs. The second thing we're asked to do is determine overhead allocated to production during January. Here is where we'll use our overhead applied formula. You'll recall that the overhead rate was calculated to be $2.50 per direct labor hour in Part 1. So overhead applied, we'll take that $2.50 and we'll multiply by actual activity. Since our rate is per labor hour, the activity we focus on is actual labor hours. We will apply or assign $7,500 of cost to inventory for overhead. The third thing we'll do, it says if actual overhead at the end of January is $8,000, did the company over or under apply overhead during the month? I'm going to set up our T account. I'll put actual overhead cost on the left side and applied overhead cost on the right side of the account. We see from what's given, we actually incurred $8,000 of overhead. We calculated the overhead applied to be $7,500. You can see that we have a $500 balance. Now let's pause to understand what this is telling us. Based on our overhead rate, we assigned $7,500 of overhead costs to inventory. At the end of the period, we find out we actually incurred $8,000. Since we incurred more cost than we assigned to inventory, we have a $500 balance that is underapplied. We have underassigned cost. So the last thing we'll look at, assume the manufacturing overhead account is closed out at the end of January and the balance in the account is immaterial. That means it's not a significant amount. We'll be adjusting entry increase, decrease, or have no effect on cost of goods sold. If you have underassigned cost throughout the month of January, you will need to increase your cost of goods sold. The thing you're trying to do here is get your records right. So if you have underassigned cost throughout the month of January, you will need to increase your cost of goods sold to better reflect what actually happened. Now this is a good time to stop and review your notes. What we're going to do next is work a few different examples, and if you are familiar and understand what we've done up to this point, it really will be helpful. Tune back in soon.